A wise investor must be informed of the specific investment they are investing in. It is critical to consider the rewards and hazards of investing and the most crucial aspect that will decide an investment's success. Investors will be unable to make a decision unless they have access to this sort of information that we will be sharing with you in this video. In this case, the investment isn't actually an investment. It is more akin to gambling. Hello, and welcome to yet another intriguing video that we have tailored just for you. It's all about the stock market versus cryptocurrency today. Stay tuned and don't touch that dial. Before we start, hit the subscribe button and turn on the post notification bell. With that done, let's get started. Most cryptocurrencies are backed by no actual assets, specialized stablecoins being an exception, as are the most well-known crypto coins such as Bitcoin and Ethereum. Because cryptocurrency isn't backed by cash or assets, speculation fueled by sentiment is the only thing driving cryptocurrency values. Prices vary, often substantially when sentiment shifts and prices alter. As a result, cryptocurrency is driven by the expectation that someone will buy it at a greater price in the future. It's known as the greater fool hypothesis of investing. It may have greater returns than 5 to 6% yearly. Crypto was initially created in 2009 by a mystery entity, Satoshi Nakamoto, who laid the groundwork for Bitcoin's growth. Through this groundwork done by Satoshi Nakamoto, all the other crypto coins have come to existence, attracting many investors. Having seen how crypto works, let's now look at stocks to get the picture so that we can compare them head to head. Stocks, unlike cryptocurrency, are units of ownership in a publicly traded firm. Every share acquired represents a portion of the company's ownership position. The amount of ownership you obtain is proportionate to the number of shares sold by a company to you. Suppose XYZ Corp releases 50% of its capital in this scenario by issuing 50 stock shares. If you buy one of the shares, you effectively own 1% of XYZ Corp. While rarely occurring, if a company releases more than half of its assets via shares, it is possible to buy the company by acquiring enough stock. A stock's price changes as investors assess the company's prospective performance. Although investors may be too optimistic about the stock's future in the short term, the stock's price is ultimately determined by the company's capacity to grow earnings in the long run. This suggests that the stock price will rise in the long term due to the success of the firm in charge. Having seen how to invest in cryptocurrencies and stocks, let's now get started with the real thing and see the differences. There are a few fundamental differences between investing in cryptocurrencies and investing in equities if you are an investor. Some of the most significant ones are volatility. Cryptocurrency is undoubtedly the most volatile asset you can invest in. This is true for both individual investments and the market as a whole. It makes no difference whether you buy Bitcoin or an altcoin, slang for virtually any other asset in the market for cryptocurrency. The cryptocurrency market is a roller coaster. Assets may triple in value and then be wiped away in hours. Investors might earn billions in this way, but in reality, the opposite is also true. Individual equities are less volatile than crypto, but are not as consistent. Before introducing cryptocurrencies into the market, shares in a single stock were regarded as the most volatile investments available. Despite the unpredictability of individual assets, the stock market is often steady and trustworthy. Next, let's look at returns. How do they compare? If we're talking about returns, it's cryptocurrency and stock market speculation. Many equities have gained 10 times in a single year, while specific cryptocurrencies have gained even 100 times in just months. This is entirely dependent on the company or cryptocurrency and several other variables. The value of one Bitcoin has risen from zero at the time of its inception to an all-time high of $68,990 in November 2021. These figures have left a lot of stir among many analysts, where some believe that Bitcoin will rise while others suggest otherwise. A buyer must typically open an account with a brokerage firm such as Charles Schwab, TD Waterhouse, or Fidelity to purchase and hold stock. The brokerage may conduct transactions and hold equities in the buyer's name. Recent organizations like Robinhood have made trading simpler, but there aren't as many possibilities. The buyer must also provide personal information, such as your social security number and street address. On the other hand, we have crypto. One of the benefits of cryptography is its security. Nobody needs to know who is buying cryptocurrency. A cryptocurrency owner holds assets in a digital wallet or on a storage device such as a USB drive. The disadvantage of anonymity is that the duty for security falls on the person who owns the crypto, who must monitor where the crypto is kept and remember a password of at least 16 characters. Still, all this becomes useless if cryptocurrency wallets are stolen by hackers. Next, let's look at the aspect of trading and regulations. Stocks, like other securities, are among the most heavily regulated assets you can invest in. The SEC regularly monitors the public stock market and the marketplaces in which the securities are listed. There's currently no centralized exchange system for crypto. Instead, a group composed of thousands of enterprises manages their own exchanges that enable customers to trade their cryptocurrencies among themselves. However, while a few well-known cryptocurrency exchanges dominate the news, there are no major players in this market. In a nutshell, cryptocurrency is the most popular subject of debate among new investors, putting them in danger of overlooking the tried and true long-term wealth-building potential of equities. Investors, on the other hand, may lose out if they do not examine crypto thoroughly. But all in all, it heavily depends on your individual financial condition, time frame, risk tolerance, and goals. These will determine your best choice, just like any other investment. That will be all for today. Which among these investments have you tried? What is the experience like? Please share with us in the comments section. Thanks a bunch for watching. Make sure to subscribe and turn on the post notification bell. Adios!